Good morning, Peter Rose, Longwood Currency Trading. It's the 20th of December in 2020. I've got my coffee. It's in the morning, actually. That's why I said good morning. I wanted to do a video on the reality of intuitive trading. I've been trying to work with several folks now on trading, and the issue always comes down to, and probably why I don't have very many students, and that's okay. I don't want a lot of students. Most folks that are looking for trading help are looking for information. They're looking for the secret sauce, the pixie dust that will make them profitable. I think that's why most folks are not only attracted to indicators, but also why most educators rely on indicators in order to teach people, because it gives you something concrete. You can say to somebody, take an 8 and a 21 period moving average, make the 8 a exponential moving average, is when the 8 crosses the 21, that's a signal to either buy or sell, whatever you're going to do. And that's an easy recipe to follow, and somebody can do that and say, well, that guy made it work, so I should be able to make it work. And the guy that is teaching that stuff isn't making that stuff work. That's a fallacy, and anyone that will tell you any different is full of crap. I've got a degree in physics, I got math, I got a lot of science background, I'm very practical, I've been involved in the martial arts for 50 years. I didn't just fall off the back of the truck on this stuff. I've had a 40-year career in real estate investment. I know what's going on. Most folks are unable to find a mentor that's legit, that will show them how to do something the correct way, rather than reading a book and getting a bunch of information. Man, I've talked a lot about this in my videos, and there's been quite a bit of discussion from an analytical side on my blog post as well, about this issue of those magic bullet, the trading pixie dust. It's easy for the student to say, oh, I've got that, I understand that, I see that when this happens, or these Bollinger Bands are here, that, oh yeah, price stays within those Bollinger Bands. Except sometimes it doesn't. And when it doesn't, you sit there waiting for it to recover, like almost a regression to the mean thing. And it doesn't. There's a change. And then you see that the indicator changes, and you go, oh, well, of course. And that's easy to see in hindsight, but not while you're there in real time. Trust me, it just doesn't work. And if you've become successful trading, it's a whole other exponential jump in your ability to be able to teach that to somebody else without relying on these indicators. I mean, how do you teach somebody something in a book? You know, if you want the real nuts on this stuff, read Al Brooks. He has tremendous insight into price action. And he's able to, because he's a scientist, he's a doctor, an ophthalmologist, he's able to phrase things in the technical sequential order that things are happening. And he has all these little patterns and all this other stuff. And that's great for him, but he doesn't trade on that stuff. He describes what happens, that if you are perceptive enough in order to see these patterns or these structures, and they're not structures, they're not patterns, they just are price action. But if you see certain things happening, then it's an indication that this could happen, or this could happen, or that could happen. And then based on something else that is over here, it kind of makes the C choice probabilistically more likely than the others. Curtis Faith is the only one that I know of who has addressed this, you know, head on in his book, Trading from the Gut. Curtis Faith was one of the original turtle traders, Richard Dennis turtle traders. And He made an enormous amount of money for Richard Dennis. He also said in his book, you know, if I didn't have Richard Dennis standing over my shoulder telling me to make that trade, I probably wouldn't have taken it. I didn't see what Richard Dennis saw. I see the information, but I didn't see how it could lead to a trade decision. So what are you going to do when a guy's peering over your shoulder that made $200 million in the market and he's telling you to take the trade? What are you going to do? Argue with him? Are you going to doubt him? You're going to take the trade. And he said by taking the trade, he saw how what he was studying and looking at evolved after the fact into this structure that any dumbass could come along later and look at in hindsight and say, well, of course you're going to take the trade there because blah, 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 blah. But when you're trading at the right-hand edge of the chart in real time, you have to have that instinctive view of the market, that intuitive view. So how do you teach intuitiveness to someone? Well, you do have to teach informational based. When I'm teaching somebody, it's informational based. Here's all this basic information, and I don't teach, you know, rote beginners. I'm not going to teach you what a pip is or you know, how to trade a moving average system or all that crap. Part of my course is to direct somebody to resources that will teach that crap, but that's just the what. And then if you get a little bit more involved in trading, then you know the how. But that's certainly not sufficient to make you a successful trader. You have to know the critical when part. And that's the intuitiveness of it. That's where all of your, I don't know, mechanical, statistical analysis or probabilistic determinations of this price action or using your indicators or whatever the crap it is that you're doing, the amalgamation of all of that information, you go, huh, man, that looks like that price is gonna continue up. I think I'll take that trade. And then mystically, you know, it goes up. Well, it didn't go up because a moving average crossed this moving average or the fucking Bollinger Band did X, Y, Z, or it's Tuesday and the Fed made its report. It doesn't work that way. It's the cumulative information that you have that allows you to put those pieces together intuitively. Like the surfer. The surfer is not out sitting there watching the waves coming in and calculating height to water density to temperature and the slope of the ground underneath the water to determine how big the wave is going to be. He's just out there looking at the water. And it's his experience in catching waves and, more importantly, in failing to catch waves that he's able to determine intuitively that this wave coming up is probably going to be a good one, and he mounts up and he's on it. And so trading is the same way. Studying music is the same way. Fixing a freaking car. My son's an auto mechanic, and he has that kind of view of the thing where other mechanics will come to him and go, you know, I see this and I see this, but I don't understand how to fix it. And he's real good at that with electrical stuff, electrical wiring in a car. And people who have as much education as he does and a lot of experience, they go, I can't figure out why this doesn't work. And Colin steps back from it and he looks at it and analyzes the situation and goes, well, you know, I think this is the way you're going to do it. But it didn't come out of a book. It's a kind of an intuitive approach to doing something. You know, if you're carving a pumpkin for Halloween, if you are in a country that celebrates Halloween, you don't do that because you saw a design, you know, in a magazine. You have to have some creative flair that puts something into it. Otherwise, it's just hacking up a perfectly good pumpkin. And so, trading, I mean, you know, you have so many people that are not capable of trading, voicing their opinions, and other people listen to that about how you can't rely on your intuitiveness and you can't rely on your gut. trading is counterintuitive until you understand what that counterness is. What is that all about? Because when you first start trading and you use the intuition that you have from your general life experience, it doesn't work. I mean, I've got a lot of great life experience and stuff, and I lost $50,000 because I was basing it on the intuitiveness that I have to markets, and you know, and I'm not stupid, but I tried following the recipes that are given out there, and they're called best practices, and they're not best practices because they don't exist. The folks that are propagating that stuff simply don't know how to teach, or they're not willing to take the time to teach because they're trying to make a lot of money from their teaching. Do you know that a lot of these educators make more money from their educational efforts than they do from their trading? It's a very lucrative model. And so if you can convince somebody that you've got the magic pill, they don't have to work, they just have to learn this indicator thing, they're going to sign up and they're going to pay you the whatever it is that the course is. It's ludicrous. And but how do you teach somebody? Unless you're willing to take the time, not on a video or on a book where you're talking about how you imply the intuitiveness. I mean, read Curtis Faith's book, and you're going to read through that, and you're not going to know any more about how to trade unless your mind is open and you've changed the way that you think about indicators and all this other stuff. And he doesn't teach how to trade in there. He teaches how to look at life. And most of us just live life. We don't look at it and analyze it to enrich it or enhance it. The Chinese philosopher Lao Tzu says to know oneself is to know the 10,000 things. You can read all the trading books you want, but if you don't understand intuitively who you are as a person and how you react to life around you, you certainly are not going to be able to interact with the currency markets, let alone general life itself. You become bitter and disenchanted with the bad breaks that you get. And if you approach your trading in that same way, you can't be successful at it. It's a very Zen thing, unfortunately. And everybody out there is going, I ain't gonna listen to any more of this video shit. Well, okay, fine. That would be your mistake. That's gonna cost you a lot of money. I can't teach you how to trade, but what I can do is I can teach you about you and your view of trading. That's what I try to do in my course. That's what I'm trying to work through. And the course, I tell you right up front what my secret sauce is. I have two things. Well, there are two issues of trading. One is to determine if there's a trade that's there, and then how do you get into it. And the second is all about risk management. And so those are the two things that I teach. The first is get the risk management out of the way. Risk management is not as important in the hierarchy of things that you do in trading. In trading, the most important thing you do is try to identify what the trade could potentially give you, and if it's worth going for, then you look at your risk. And there's only one thing that you look at for risk. Most people are looking at the wrong thing for risk. And so the two things that I work with in my when I work with a student is to eliminate the risk management altogether. Just get rid of it, because it's such an inordinate focus of most books and all this stuff about risk-reward ratio and all that. It's all bullshit. It's all bullshit. The risk-reward ratio has absolutely nothing to do with price action. So just forget it. So anyway, that's my first secret sauce element, is to eliminate the risk from the trade. And the second secret sauce is looking at the momentum that price has when you've identified that you have a potential trade there. Does price have what we call momentum? Does it have the force to continue on from where it currently is to get to that price target, whether your price target is 25 pips like it is for me, or 250 pips if you're a longer term trader. It doesn't really make any difference what that is. Once you eliminate the risk factor, then the process of evaluating your probability of success of achieving the profit target by looking at the momentum of price and the projected momentum of that price, that's the secret sauce of that part. And that's the when part. But you can't, you know, in some of the work that I've done kind of an arm-waving mathematical view of what that price momentum would look like, so that if you had the time, maybe if you were a long-term trader, you could do the calculations and the math. You know, I present a relatively simple methodology of doing that. Well, the simplest methodology is just look at the fucking chart. Okay, but the next step in complexity up from that is to do some very simple math using some basic physics and looking at the price action at that point. And then if you really want to get complex about it, there are some differential equations that can be derived and solved to come up with numerical values for this stuff, and then you do comparative analysis. So if you want to go through all that shit, if you're a long-term trader, you certainly can't do that if you're day trading or even you know, swing trading over the course of a few days. You just don't have enough time. But if you're a longer-term trader, if you're trading off the daily chart, for example, you can take the time to do those sorts of calculations. And that's why the hedge funds and the long-term management folks, the successful ones, are able to get success in their trading. They have to use those numerical methods, but then the most successful of the hedge funds and the huge traders, if you're making 20%, I mean, I think Warren Buffett has annualized returns over his 50-year career, 40-year career, 20% a year. Now that's that's enormous amount. You get 100% every 5 or 6 years when you take taxes out every 6 years, probably. That's outstanding. If you can do 20%, but see that you can't do more than 20% because of the scale these guys are working at and the fact that they're compounding. There are many simplifications to that model for the retail trader, and yet the retail trader is being taught by people who run hedge funds to do their retail trading the way that they do. It's not compatible. It's like having you know, I took classical guitar lessons for 2.5 years from Walter Spaulding, who was a world-class classical guitarist, and he was teaching me to be a concert-level guitarist, the exercises and all that other stuff. And I said, Walter, you're teaching me like I teach martial arts. I mean, it's an all-consuming passion. And, you know, I mean, I was playing guitar 5 hours a day, and only 30 minutes of that 5 hours was actually playing music. The rest of it was drills and technical exercise and scales. Walter, I just want to play some music. I don't care whether it's concert level. I just want to play some tunes. Jesus. And the retail traders are being taught by hedge fund managers and institutional traders, and they're going, what the fuck is this? You're limiting me to 20% returns a year if I trade like that. You know, Jack Schwager's recent book, Unknown Market Wizards, are about guys that are making annualized returns of 300%. You know, what? If you're a retail trader and you're trading with even a few $1 million, you're way up there in your in the bank that you're trading with from a risk standpoint. I mean, it isn't that you couldn't make $3 or $4 or $5 million from your trading, but you're not going to be trading that amount of money. Most people wouldn't be able to do that. The successful retail trader is the guy that scrapped it out starting with 10,000 or 20,000 bucks and built his account up to 6 figures. He's not trading a 6 or 8 figure, 7 figure account. He's just trading 50, 60, 80,000 bucks at a pop because he can get 30 and 40, 50% returns. So why risk trading $3 million? Well, what are you going to do with all that fucking money? Once you have $3 or $4 million, you got everything in the world. What do you want? A bigger boat, a plane? What's the point? What are you trying to do? Live life like Grant Cardone? Who gives a shit? The guy's a miserable prick. Man, you know, the reason that you make money is to enhance your life, not consume it. You know, I'm retired. I worked my life very hard in real estate. I retired a millionaire, and I've got enough money to sustain my life. My wife and I can go out to dinner. Well, in the middle of a coronavirus pandemic, we haven't been out to dinner in a year. So we cook and we do this. We set aside so much money from the retirement account so that we could travel every year. We haven't traveled at all in the last year and a half. And so that money is adding up. So when all this stuff gets lifted, we'll have this excess amount of money. And what am I going to do? Buy a fucking BMW? I've talked about this on videos before. I've got a beat up old 2003 Subaru Forester that is for sale now, and I'll buy another car, but I'm not going to spend. What am I going to do? Spend $50,000 for a truck, or $100,000 for a BMW? What do I need that for? To show everybody how important I have and to show everybody how much money I have? What do I care? And I don't have enough money to buy a Lamborghini, and even if I did, I wouldn't buy one. You have to put things into perspective, because as a retail trader, you should be able to get 20, 30, 40% on your risk a year. But geez, if you're trading for the wrong reasons, that isn't going to happen. You can't trade for the money. You got to trade for the love of it. And when you trade for the love of it, then your intuitiveness can come into play. Read Curtis Faith's book and see what he has to say about that. It's a you know, when somebody comes to me and says, you know, give me the secret sauce, I want to learn how to trade, and I talk about stuff like this, they just go, they turn off the volume. They don't hear me. Oh, that sounds like too much work. It isn't a lot of work. It's less work than try to use all these fucking indicators and all this other crap that everybody's doing. Come on. I don't know. And that's why I don't have an educational arm to my Longwood currency trading. You know, I'll teach if somebody's willing to pay the money, because I just don't have time to work with 100 or 200 or 300 or 1,000 people. I don't have any interest in that. I'll finish writing my course, and it'll be something that I can mail out, you know, as a book, and it gives you the secret sauce. It'll teach you the information. It'll teach you the what. It'll teach you the how. And it'll talk about that when component. And if you're really a believer in intuitive stuff, you'll be able to figure out how to do that stuff from it. But the majority of you won't. You'll pay the money and you'll read the thing and you'll go, Peter Rose is full of shit because I didn't learn how to trade. The reason you didn't learn how to trade was because you didn't want to do the fucking work, or you didn't want to do it in the right way. The only other option from that is to buy the enhanced version of that course, where you would have some communicative ability with me. But I'm just one person, so what am I going to do? I'm going to work with 100 people a week or 100 people a month? How does that impact on my retirement? Walking in the woods with the dog and driving around. We're going to be driving around tonight to look at the Christmas decorations that everybody's put up. And yesterday I spent roof raking the snow off the roof again. Man, this is the third storm that we've had in a couple of weeks, and this was the worst run that we just got through the other day. We got 24 inches of snow in a very short period of time. Now, you know, in the big picture, if you're in Vail, Colorado, or in the mountains or something somewhere, or on top of Mount Washington in New Hampshire where I am, then 2 feet of snow is nothing. You know, you go to a ski area and they go, oh, we got 2 feet of snow. You know, everybody goes, well, is that enough? But 2 feet of snow is 2 feet of snow when you got to shovel it, right, or get it off your roof. And so it was a big storm. We had a nor'easter the week before. I was out 4 hours shoveling and pulling snow off the rake, and then another 4-hour day cleaning that up, and then I had a 4-hour day the other day with the results of this storm, and then yesterday I was up roof raking again and getting calcium chloride along the eaves because I spent about 2 hours on a ladder yesterday. I'm 71 years old, but I'm in good shape from my karate, so that's okay. But if I've got 50 people trying to call me to talk about trading, I wouldn't have time to get up and do stuff like that. I could pay somebody else to do it, which I did the other day because whatever. But being retired, which is the goal of everybody to make money, is to be retired. You don't want to have any responsibilities. The only responsibility I want to have is what's the wine that's going to be for dinner tonight. For God's sakes, oh man, people just complicate it. You work your whole life and then you go retire so you can work again. We got friends that just retired. The guy's going back to work part-time. Why? If you don't manage your money correctly, if you didn't have that intuitive sense of your life to know how much money you need to put away so that you don't have to make any more money, that your money makes money for you, then you're going to be in tough shape when you hit 50 or 60 years old because you're looking at that retirement. You don't have enough money. Trading is the answer to all of this, guys. Don't piss it away. Don't piss the opportunity away because you're going to rely on an indicator to magically make you a trader and you're going to make 50% a month on your on your money, because you're not. The indicators don't work, and 50% a month is not reasonable. If you could make 10% a month, that's 100% a year. Can you make 10% a month? Well, I don't know. Before I had codified my rules and stuff, and working in a demo, which really doesn't count, I averaged 15% a month for long periods of time until I would stumble into a situation that I hadn't seen before, and then I'd flush out 60 or 70% of my account, which meant that I just wiped out the previous 5 or 6 months of trading. Now that I have my rules more codified because I understand how to correctly use the intuitive the instincts that I have in trading, I develop those based on my experience. It's again like Jesse Livermore says, says, the only way to get a real education in the market is to invest cash, track your results, and learn from your mistakes. And that's what builds the intuitiveness. So the question is, you're going to learn from your mistakes, but means you got to make mistakes, means you got to lose money. So if you're going to learn how to do this stuff, you start with a small account with a good set of foundational principles, which is what I teach. I don't teach information trading, I teach principle-based trading. You got to find somebody who's going to teach you principles. So you learn the principles and you experiment with a small amount of money so that it doesn't cripple you and it doesn't sour you to trading. You take a $10,000 account or a $3,000 account, you put all that money in there and then you lose it, and it was really hard for you to get that $3,000 or $10,000 up, and now you got to work 6 months in order to build your bank back up so you go back in. Pretty soon, just like the whack-a-mole, you don't want to put your head up through the hole anymore because you're going to get hit. So you start with $1,000. Don't start with $100. If you want to start your trading career with $100, don't ever send me an email asking me for any advice or help, because the only advice I can tell you is use $1,000 in a demo account until you learn the plumbing and the mechanics of trading, and then when you go to trade, you use $1,000. If you're a multimillionaire, you do the same thing. You use $1,000. My problem is, at this point in my life, I can't go back to the $1,000 because of the real estate background that I have. Losing $20 or 20 points on a mini is $20. That's a pizza. That doesn't mean anything to me. If I lost $2,000, that would, I'd go, whoa, I don't want to lose $2,000. I'm going to limit that to 200. But that's my problem. That's my fault. I learned the wrong way. I learned by reading all these books and by watching all these videos and trying to develop that feel of the market that everybody's talking about. But you don't get the correct feel of the market by reading the books and watching the videos. You do not do that. It cost me $50,000 to learn that. So you think I'm going to give that away for $22.95 and a pair of Ginsu knives to some dumbass that only wants information? Nah, that's not going to happen. You do have to work and you do have to put your time in, but it's fun. If you wanted to learn how to sail a boat, you'd have to work. You got to pull in the main sheet, you got to use the jib, and you got to, bail it out every now and then when you dump the gunnel too far over. But that's fun. And it's by that investing the cash and tracking your results. When you make mistakes or you're successful, you're going to learn. And you're going to put that stuff together into an intuitive trading. And that's the reality of trading, is that it is intuitive. It's not rule-based. Rules provide the foundation. It's like the snowblower that I got to go start up now. That's the rules. But it's the gas that goes in it, and it's me that's pushing it. That's the intuitiveness of it. Where to point the snowblower. You just don't turn the snowblower on and let it run. You got to have somebody behind it. You got to have somebody behind the trading other than rules. If all you have is following somebody else's rules, you're abrogating your responsibility for your trading on somebody else's rules. I know you can say, oh, I've looked at this information, I've developed my own system, and I'm going to trade that. Fuck you, you're not going to trade that. Because if you don't really understand the whole thing, your rules or your system is still based on the same shit that everybody else's is. It doesn't make any difference whether you're using a moving average crossover system or Bollinger Bands or RSI. It doesn't make any difference. It's all based on the same thing. It's past information, past average information. They're all the same. They don't tell you, regardless of what somebody tells you, they don't tell you any different information. They're crutches. Bollinger Band is a crutch to a simple moving average. You can have anybody tell you anything different, but you're looking at a guy that's got a degree in physics and mathematics and just telling you it's a bunch of shit. That doesn't mean that Bollinger Bands don't play a role. If you understand the markets and you trade intuitively, the Bollinger Bands will help you understand and refine your probabilistic analysis of the market. But for trade entry and trade signals and all the rest of this stuff, they're useless. But most folks that get into trading, that's all they have to go on. And so they throw a Bollinger Band up on their screen and watch somebody on a video trading it and try to do the same thing. It doesn't work. I took a course from one of the best traders in the country. It cost me $1,000. And I tried to duplicate his system. I couldn't make it work. Some people were able to make it work. He's a great guy. I don't fault him, and I don't fault his system. Because he doesn't trade that way. He doesn't use that shit. But that's the only way he has to describe what it is that he does. So if you traded that religiously for a long period of time, you would end up making enough mistakes where where you could see how you had to vary what he said. What somebody says is concrete. What they're thinking behind the scenes is something that's totally different, and that's called intuitiveness. It's like cooking. I tried to learn how to cook out of recipe books and stuff, and it was okay. I mean, you read Betty Crocker or whoever it is that you're going to read, Rachel Ray, and put stuff together. But this is back in 1973, I guess, 74. I traded cooking lessons for karate lessons from world famous master chef James Haller of the former Blue Strawberry restaurant in Portsmouth, New Hampshire. And I remember him coming over to my house. I'm not going to tell you the story, but I remember him coming over to my house for a cooking class, and it was inordinately revealing as to how the master approaches his craft. The same way that somebody would come to me and look at what I was doing with martial arts and would understand what it is to be a master of the martial arts, as opposed to reading something in a book. So I know it's been a long video, but the road from informational trading to intuitive trading, it is a long road if you try to do it yourself. If you have a mentor, I think you could probably be pretty successful at it in a couple of 3 months. But that isn't like reading something once a week or doing some general practice. It's pretty comprehensive a study that you'd have to do. But if you're willing to put that in, then you'd be on your way. Not that you're going to be successful making 20% a month out of the gate, but at least you're not going to lose any money, and that's a huge plus, because 90% of the traders lose 90% of their money in 90 days. So if you can beat those odds, you're way ahead of the game, and you're well on the road to success. Think of it this way: if 90% of the traders lose 90% of their money in 90 days, that means 10% of the traders make 90% of the money in 90 days. Think about that. That's why the guys that are successful, and girls, women, there's some tremendous women traders. In fact, I think a woman can be a better trader than a man. And that's no shit. I haven't had the opportunity to work with a woman in trading, but I certainly have experience in the biographies of successful women traders to know that they figure out the intuitiveness of it far faster than the guys do, believe me. So just keep all that in mind, that trading is fun, making money is really fun too. Losing money, not so much fun. Your choice. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.